Chris, so as of today, you're about 4% there. Why do you see another 6% coming for the remainder of the, let's call it until the end of June?
Yeah. So let's just talk about the here and the now. Okay. A lot of people are asking us, can we see another 5% right here, right now? Answer is maybe yes, maybe no. Right. As you know, and most of our viewers know, you're sitting on very important technical levels for the S&P and for NASDAQ, the 100 and the 200 day. We could see a bounce. If we see that bounce, what we would tell clients is this is an opportunity to reposition. We think at some point in time, we get that 10% pullback. And the reason being, it's pretty simple. Growth is decelerating. There's a lot of speculation in the marketplace. The Fed's getting more aggressive. And at the end of the day, this has been a bend not break market. And at some point in time, we are going to break. That mentality is very dangerous. And at some point, the market is going to go down 10%.
And earnings are not going to bail us out this time?
I don't think so. Earnings have been good. One of the things we talked about last year is you were going to see the market follow earnings and earnings revisions because a lot of companies had removed guidance. You had a very strong recovery, and we were expecting numbers to go higher and go higher very quickly. That was true. But now, after a year of that, you've arbed that out. People now understand it's a much more efficient market. The opportunities are less. The recovery has already happened, and growth is beginning to decelerate. Right? We're talking about margins peaking, and quite possibly good will be bad this year. In other words, if the supply chain begins to improve at the margin, pricing power may become more difficult, and that has significant ramifications for margins and multiples.
Interesting. It almost feels like reading your notes, Chris. It's a tale of two halves, 2022, because you're going to see this 10% pullback, which is what you're forecasting in the S&P, and maybe in the second half of the year you see a rebound as well, in part because of goings on in D.C. and midterm elections. Is that how you expect this to play out, or does so much of it actually hinge on, for example, the Fed and also the trajectory of this pandemic?
Morgan, I think that's fair. I think it is a tale of two halves. And one of the things we keep saying is this is not like '07 where systematic risk is through the roof and there's no price for risk. There's a price for risk. We just think it's lower. The underlying fundamentals are fine. We just need to normalize. And once we uncover that value, once we get that 10% pullback, we get rid of some of the speculation, some of the froth, we think there's real opportunity. And in the second half, one of the things that we see that's a catalyst is there's potentially a red wave. And typically when we see the Senate turn Republican, that's a very good sign for the capital markets. So we could see a pretty rough first half, but an improvement in the second half of the year.